you look at the reaction today, you'll be surprised, Srishti and Cheryl, this is the delayed reaction of the budget.
Yeah, absolutely.
You know, this government has always taken a stand that good economics is good politics. And if you remember, just a week back, Finance Minister at one of its platforms did say that don't expect anything major, any massive fireworks in the budget. It will be prudent policy making. That's all you should expect. And what came through? It was exactly that. If you read Swami's take this morning in the front page of Economic Times, he has also said the same thing. Akash Prakash, a very well-renowned guy, has also written on his note. It was a very good, prudent budget. In fact, Nilesh Bhai is also joining us. Nilesh Bhai, afternoon. Thank you so much for chatting with us on phone. You must be en route to some meeting, I am supposed, but it looks like a delayed reaction of the street, which is now understanding that prudent policies are actually good for the economy. No real fireworks always should be expected from platforms such as budget.
Undoubtedly, Ajay Bhai, yesterday's budget was citizens' pride and peers' envy. Market probably looked at global clues as markets were down globally day before yesterday. But yesterday, some of the results in global market pulled the market up. And then, we also came back to our fundamentals. The budget, or the interim budget as they call, was way beyond expectations of the market on fiscal consolidation. It still delivered on inclusive growth and infrastructure investment. Net, this is citizens' pride and peers' envy vote on account.
Exactly. In fact, the larger point, if you remember, last hour of trade yesterday, we were speaking right here on ET Now, and you were saying that street may have not appreciated enough. The bond market actually has, better understanding, and that's why the yields tanked almost 10 basis points yesterday. That the lower borrowing number, good capex, all of that is a mixture, and disinflationary in nature could take rates lower in coming months.
So Ajay Bhai, when you make such statement, and since I can wear both the heads of bond market and equity market, let me make a statement. Bond fund managers are real bond. They are smart.
That's a good point, and you have been one, yes, on both the sides, so you understand the bigger picture. Just one last word before we go. We'll let you go, Nilesh Bhai. What does lower interest rates and lower inflation mean for market valuations right now?
Basically, lower inflation provides us macroeconomic stability, and lower interest rates this time is unlikely to benefit India Inc. as much because we are not really leveraged. The debt equity ratio is very, very low. But it does help on valuation side. Lower interest rate means higher valuation in equity market. And there are concerns on India's premium valuation. But if our local interest rate comes down, to that extent, valuation get re-rated. And eventually, over a period of time, this will push rating agencies to upgrade India's rating. We are going back to the path of fiscal prudence after COVID. We haven't given stimulus like mad as it happened in some of the other developed nations. We gave more guarantees and which were not encashed. And this has kept our debt to equity ratio or debt to GDP ratio for the country under check. So my feeling is that one, in the near term, it gives macroeconomic stability. Over medium term, it helps in reducing India Inc.'s interest cost and equities valuation. And eventually, it should result into the rating upgrade for India. How long rating agencies will have moody nature and poor standards?
Thank you so much for your time and that takes. So Nilesh is one of the very rare voices, Cheryl, who understands bond market. Yesterday, it was all about bond market.
Yes,
so bond market
absolutely.
reacted first, stock market reacting now. Because they understand that prudent economics and good policies do not have very fireworks kind of. It's it appear very boring and routine. Some people are even saying, "Arey, it was a non-budget, non-event."
Yes,
See what is
non-event.
happening now.
So when we had Mr. Bhasin just yesterday and I was sitting with him in that room, the time the announcement was made on the fiscal budget, he himself said that the yields will drop and SBI will be the biggest beneficiary.
And SBI results also there
Yeah.
today. So pull up SBI as well, guys. SBI is actually at a record high, heading towards a record high. We'll get Mr. Bhasin back on the channel because this morning at 8:30 when we were talking to him, And I asked him that whether we are heading to an all-time high in the next 24 hours or this week. He said no, 11 o'clock is when he's expecting it, just 1 hour. Pull up SBI. SBI is the one which is helping Bank Nifty a whole lot today, as well as the PSU Bank pack, right ahead of the budget. As Srishti said, also a big beneficiary of yields heading lower. SBI.
I spoke also to SBI this morning exactly on this particular topic itself. The State Bank of India chairman, who said that the yields have already started trading on the lower side, and said lower yields will actually help the private sector to come and borrow. So that's the statement coming in from the SBI chairman. And we have also Kunal joining us on the show. And let's talk about SBI in particular, Kunal, and let's actually talk about State Bank of India as well. Where is it headed? Because you have Ajay who said that that's also one of the beneficiary, given the fact that it's headed towards the record high level as well itself. So what does it mean for the stock as well as the sector?
You know, the best part is Nifty is making new high. Bank Nifty is far off from the previous new highs, and SBI is also some distance away from hitting a new high above 660 levels. So that itself tells you that the market texture is extremely buoyant this time around. What we were lacking in the last 1,000, 2,000 points of the index, that large cap, the zing in the large cap stocks is missing. I think now that finally gets completed, because look at the kind of stocks today which are rallying up higher. The PSU banking names, the private sector banking stocks are moving up higher. IT stocks, auto, Reliance, OMCs. So, you rarely get such kind of construct. And on such days, it's very difficult to restrain the Nifty. So, I think it doesn't come as a surprise that you're seeing the index hitting a new high.
Let's have Bhasin Saab back on the phone line. Sanjeev, in the morning when I asked you that 24 hours, whether we'll hit an all-time high or this week, you said 11 o'clock. It's 11:30 or thereabout when we hit. What precision? Where do we go from here on?
अजय जी, yesterday ऐसे ही नहीं मैंने भंगड़ा डाला था आपके साथ.
Yes.
और मैंने आपको कहा था, I told you don't underestimate the power of the Indian bull and the Indian retail. That is where the money lies. The money does not lie with the foreigners. It is the Indian retail and the Indian bull and the Indian PSUs. When have you seen PSUs hit the type of highs they are doing? So God bless, touch wood, keep watching ET now and make money. And I told you 24 hours will be completed at 11 o'clock. The budget is not finished of yesterday's and the index is new highs. So the feeling of missed house is humongous. I told you banks will join the rally. This is the time to put your money where your mouth is. Choose good stocks, preferably more on the large cap, but at least participate. We have miles to go before you sleep.
Superb on a day like today. So give us some fresh 2 ideas also before we let you go. We are getting greedy.
So Ajay, I am very, very optimistic on Nestle. Now I own Nestle from 25 years and I will make no bones that I will be beneficially if it goes up. But Nestle, according to me, is a 30,000 rupee stock. So buy Nestle, the results are on 7th. It will be a huge outperformer. And my other pick, I again reiterate, India Bull Real Estate is a no-brainer. This stock is headed to 200 by the end of the year.
So that is Nestle India as well as IBREL, that is India Bull Real Estate. A no-brainer is what Mr. Bhasin has to say. Thank you so much, Mr. Bhasin, for joining us on the show, sharing your new fresh top picks with our viewers, as well as